back. Markets more or less holding steady. So we are turning the spotlight now on one specific company to talk about whether there's any kind of worry or impending weakness in the second half of this year. We'll have the management of Insecticides India join us in just a minute. Now, the reason why we're having this discussion is that ICICI Securities has come out with a note citing the possibility of a tougher Rabi season. So therefore, perhaps some of the agri-based companies could have something to worry about. What are they saying? They're saying the macro indicators point towards a tough second half. Key reasons being lower reservoir levels in West and South India, deficient northeast monsoons, deflation in food prices, and rural inflation being higher than rural income. So basically, less money available in rural India, and lower disposable income. So these are some of the factors that they are citing. Now, is this indeed a worry for a company like Insecticides in India? That's the question. Let's pull up a one-year chart of Insecticides because the stock has done a very nice rebound from its 52-week lows. It's almost 45-50% off those levels, currently quoting at 570. So let's get this conversation going. Rajesh Agrawal, MD and CEO of Insecticides India, is with us. Mr. Agrawal, good afternoon. Thank you for joining in. I think you just heard some of the comments that we made. These are concerns of one particular brokerage. Do you share these concerns when you are looking at the second half of the year for your business?
Generally, India is a vast country actually, and the climate across the country is not the similar always. So different zones have different issues always, and there are some places which are very positive. There are other places which are not that positive. During this season, as you know, this is the winter season. The pest infestation is relatively much lower. The major sales which happen is for the herbicide and also for disease control and fungus control, which means the fungicides. So I see that happening, and once the winters become off, then insecticide sales will also come. So I don't think that it is a major worry. As such, if we divide the season, Indian agriculture season is divided into two parts, Kharif and Rabi. Kharif season this year got an extension into October, which means it was a delayed season, and so is the same case with Rabi. Rabi is also a delayed season, which means it started little late and it is going to extend little late. So I don't see any signs of worry, rather I am very, very positive. Like we have finished the previous quarter, the sales are going on fine, and I believe that in the second half we'll show a good growth actually in this season rather.
Actually, sir, what could be the growth in the second half of the year? In the first half of the year, it was a growth of close to about 2% that you enjoyed on the top line. What could the number look like for the second half of the year? Because, the sowing itself is down about 3.5% for this Rabi season.
Overall, like we had introduced many products, and as I told you that Kharif season got an extension. So I saw that Kharif season sale happening in the month of October, which will give us a boost in the third quarter, and also in the fourth quarter I see a good jump. So I can say that there will be at least double-digit growth in both the quarters.
So, okay, let's just then talk about, in the second half, what are you expecting to do in terms of volumes? If we just talk about the insecticides business, then what kind of a number should we expect? And also, how are prices moving for some of your key products?
Prices are more or less stabilized because currency is doing better relatively. Rupee is becoming a little stronger. Crude is also down. So I don't see much changes in the price at this moment actually, because the momentum of new season is going to begin, and generally we are also watching the market and trying to observe the international market. So in the complete last year it was a chaos in the chemical pricing. The chemical pricing, the chemical availability was a constraint which led to increase in some prices, but the situation today is more or less stabilized. So I don't see any hike in the short term, but the prices are stable. So whatever growth is going to come, it is going to be the volume growth only, which I see in this Rabi season.
And you said double-digit growth in Q3, Q4. So if I talk about second half as a whole, because top line first half has been very, very dull. So second half, Q3, Q4 put together, top line growth, can you give us, is it like low teens, high teens, mid-teens?
You are trying to drag me, but it will be good teen number, I would say.
Good teens, okay.
All right. What about margins, sir? In the first half of the year, it was about a 16% margin at the EBITDA level. Will you be able to hold on to it or better it? And also walk us through how the raw material pressures have panned out.
Actually, we are trying to bring the new solutions to the farmer. So our vision is that farmer should get the solutions, not the products. So we are trying to introduce new products, what he is wanting, trying to bring the new generation technologies available to the farmer. So our entire focus is towards that. And when we are doing that, of course, it also has some little better margin than the generic products. So yes, there is pressure on certain prices, but still I don't see much change happening. So overall, our performance should look good, better than many of our peers because of these new introductions.
So
and we are poised to bring the new generation molecules continuously.
Okay.
At this moment, it looks like to be stable.
Okay, you know what, sir? The same brokerage that is so sort of, cautious on the sector as a whole actually has a positive call on your company, your stock. Now, they are expecting margins to cross 15% next year. 15.3% is what they're expecting. Are these justified expectations? Do you think you can meet them?
We have a vision that we will keep on growing our margins by about 150 basis points year on year actually by introduction of these new molecules and focusing on the new generation technology. So because this is the outcome which will come automatically when we'll be focusing more on these new generation and cutting down some of the generic molecules which are not worth now working in the market. So I believe that yes, we will continuously keep on improving our profitability along with the top line growth. But our major focus will be yes around development of new molecules, working with the farmer, training the farmer about the right product, how we can increase his income, how we can help him to do better agriculture. That is the major focus, and these are the outcomes which will definitely come.
Okay, so 150 basis points margin improvement year on year is the target Insecticides India has set for itself. What about the kind of investments that you're making? Can you put a number to it to give these new age solutions to the farmers?
Difficult to give the number because we have applied for expansion in all our units actually. So these are subject to environmental clearances. As we get the clearances, we will keep on putting in the money. We have budgeted about 200 crores for a 3-year project actually, but it will depend on the clearances actually. So based on the timeline when I get the clearance, I'll keep on putting up the facilities actually across our plants. So this will be a process which may take a little longer time also, and it can be fragmented depending on the clearances.
Okay, Mr. Agrawal, we will then wish you good luck with those plans. Thank you very much for joining in and giving us some perspective on how this is going to play out for Insecticides India. This is a company that doesn't share those kind of concerns. In fact, they're expecting a much, much better second half than the first half of the year. Let's take a break on that note. On the other side,